Micron stock is going on a generational run. And if you're in Micron stock still after this run, congrats to you because you have to be loving life right now. Welcome back to another video. There's a few things I want to talk about in this video. We're going to talk about the memory crunch. We're going to talk about the market sentiment right now and kind of like where I think we're sitting right now. And then we're going to get into projections, specifically on where I think Microsoft is going to go. And then we'll maybe get into like Oracle stock as well. But before we get into it, if you could just give this video a thumbs up, I'd really appreciate it. So, Micron stock, just looking at this at $900 a share is insane to see this, right? Because if you followed me since the beginning of 2025. You remember I did buy this. I had Micron under, I think my average was like $85 a share. And I think it was actually a little bit lower than that. But I sold, doubled my money. And yeah, now we're here where I could have 10x my money. So yeah, what a ride. I know some people have held it longer than me. And yeah, just I didn't expect this memory crunch and this run to happen this quick. Like this run is crazy. Am I surprised that they just joined the $1 trillion market cap club? 1 trillion maybe, but you know, 600, I wasn't surprised. I was just surprised that it happened that quick. And Micron is they're in a not a tough spot, but where they're at right now, right? They're expanding their fabs, they're building out, these factories to be able to meet up with the demand. So you can see, where is it? I know it's in here somewhere. Yeah, so right here, right, the HBM chips are huge. They're in huge demand right now for training and inferencing. So they've been sold out for the entire 2026. And that's why, like, I think like last year in 25 they were like sold out. Like that's how crazy this is. Them being sold out for the entire 2026, this just meets 50 to 66% of their demand. That's why this is insane. So that's why they're building out these factories to be able to keep up with this demand. But the problem is, where like when that happens, like I haven't followed Micron like I used to, so I don't know when these factories are supposed to be up. But come 1 year, 2 years, 3 years from now, because these take a lot of time to get these factories up, right? I don't know what that demand is going to look like, because Samsung, SK Hynix, they're also building as well, but like that could potentially impact them, right? And maybe they're not going to make as much profit as people expected on where they're valued at right now. And that's also why you could argue why Micron is trading at such a cheap PE right now, right? A low PE is 8 PE. Now, that's because these are very cyclical. So when you look at their earnings, right? So like what happens is it's a very cyclical business. So there'll be years of trough where they'll be trading at a high PE, a very high PE, but their profits, right, aren't as crazy, because people, you have to remember, the market's always forward looking, year, 2 years, 3 years ahead. So when people are expecting, so take this for example, it's at an 8 PE, but the problem is that's because you look at their numbers right now, you look at their earnings per share, you see how insane it is, right? But the reason, so it's going to make the PE look cheaper, but the thing is that 2 years from now, they're probably not going to be at an EPS of 20 plus, right? Like that's just because they're banking right now and making so much money because of this boom. And analysts, I think, are a little skeptical that that's not going to sustain over the coming years. Now, they could prove everybody wrong, right? Because of this AI boom, that this could be less of a cyclical company five to over the next 5 to 10 years, right? Like this boom can last for them and just help them make so much bank. But that's kind of why the PE ratio is still low, because analysts, over the next year or two, it could get hit because there are risk factors involved with them building these fabs, and then also SK Hynix and Samsung coming into play. And also, I saw something. It was a post on like X somewhere where somebody even like brought up the idea of some of these Mag 7 companies getting involved. Like, why can't Amazon? Why can't Microsoft? Why can't these big companies that have so much cash get involved and start making their own memory chips? And I thought about that, and I was like, it makes sense, right? It could happen. Is it going to happen? I don't know, because they have their own like custom silicon chips that they're trying to rent out. So, I don't see that happening in the near future, right? But when you look at a company like Micron and their net income, or sorry, their net margin is approaching 60%, right? I mean, even in like the high 30s, high 20s, when these big companies like Microsoft, Amazon, Google see the businesses that are making this much money, they're probably going to want to get involved into those businesses, right? And that's why Micron's not going to sustain, a 57 to 60 plus net margin. Like, that is absolutely nuts for a company to have. And it's just not going to happen. More competition is going to come into play, and that's just what happens. But absolutely insane run from Micron. I think you just, if you're still in it, go ahead and ride the wave. If you're buying right now, I don't know. I wouldn't buy it right now. I'm not interested in buying Micron at these levels. I think, like, if you got in back in 25, that was, you know, the best time. You just let it ride out. But right now, I feel like you'd have more downside than upside, in my opinion. All right, so where the market, kind of like market sentiment, is right now, pull up the NASDAQ. So we're sitting at roughly 29. We hit 30,000 on the NASDAQ. So it's not a weird time that we're in, but I think where we're in, or where we're at in the market, is you have people that, look, SPY, NASDAQ are going to all-time highs, and it could make the market feel euphoric, but it's really not, right? I put out a post. Oh, my bad. I don't think I can pull it up right now. Actually, yeah, I can. One second. Okay. So I made a post. So yeah, this is back in May 12th. So 8.4% of stocks in the S&P are at all-time highs right now. And I said that this market does not feel euphoric unless you're in that small amount that's carrying the market. And when you look at it, and right, you're looking at your space stocks, for example, Planet Labs. Mind you, I was talking about this like 2 years ago when it was like $2 a share. Went on a massive run. You look at Rocket Lab, right? A lot of the space stocks. Lunar was another one. I mean, not even a year ago, this thing was like $10 and it's already at 43. So you have these space stocks. Obviously, your semis, you have Micron, SanDisk that's carrying this market. And then you have these photonic stocks, right? And that came out of nowhere that not a lot of people know exist. And that's the problem. Like, this market has been risk on for years now, since 2023. Maybe, like, you can even argue the back half of 22 after that October low that we put in. But I'd say 23, like the second half of 2023, is when this bull market really started, right? Because we still had the bank runs that happened in 2023. So I would say uh, the back half of 23 is like when this thing really started. And some people, you know, they've done very well, but on this end of the bull run, and who knows, I don't know if this is actually going to be the end of the bull run, but you're seeing all of these like lower market cap stocks make these insane runs that not a lot of people know about. And this is when it gets a little risky. And I'm just saying this from experience on what I've saw in 2021. Again, completely different market, right? 2021, like nothing, I've never seen anything like that. Granted, I wasn't here during the dot-com bubble, so um, I can't really compare it to that. 2021 was just pure euphoria. You could have put your money in anything and you would have like 2x your money. That's how crazy it was. This market's not like that. But when you start to see these higher risk, higher reward stocks trading at ridiculous valuations, right? Like IonQ is back at $64 now. I don't care what you say about like quantum computing being like a real thing. When you're looking at like financials, valuations don't make sense, right? It doesn't make sense. And you have a lot of these people that made a lot of gains from the people that got into stocks from 2023, 2024, even 25. They've most likely made some decent money, right? But what happens is when you're new to the market and this is your first time enjoying this bull market and making money, you're going to start seeing these stocks that are running 100+%, and then you're most likely going to put your money into it because you're starting to you're getting that dopamine hit of making money, right? And you're going to see a stock you're thinking to yourself, what's the next stock, right? And then you're going to put your money into these higher risk plays, and then little before you know, you're down 40 to 50% on a position, and then you're like, why did I do that? So that's something that you got to stay composed, and don't let like something that you see online, like if you see somebody talking about this stock, don't just go put your money in it. Do research on it a little bit, see what the financials are, understand if it's like an actual realistic investment, or is it just something that people are trying to pump and kind of just like, right, it's for their own interest. So keep that in mind. But yeah, I mean, crazy market. If you didn't make money, if you haven't made money during this bull market at all, or didn't make enough, if it's your first time, it's okay. But um yeah, I mean, look, it's been a crazy bull market, and I think this AI wave still has a lot of legs under it. So it's gonna, we're gonna see how it plays out. But yeah, just keep that in mind around the entire market. Now, just pay attention to some possible rotations as well, because when you have these chip stocks that um, start to go down, maybe some money is going to start rotating to those other stocks that have not performed well over the past year or two. Consumer discretionary is a big one, right? You have your consumer stocks that have not performed well. I just wanted to check Cerebras real quick because this thing IPO'd and flew, and it's almost pretty sure this IPO'd at like $185. No, I forget what this IPO'd at. I don't know. But yeah, Cerebras stock is getting sold off like crazy. All right. Last thing I want to get to is, and I'm pretty excited to show everybody this, is I made this with Perplexity Computer, and it's basically just like a projection and a comparison page right now where I can just kind of plug in my own projections and get these numbers on where I think stocks are going to go. So I have Microsoft here, and I want to show you my Microsoft projection, and I could plug in Oracle and show you Oracle as well. Um, Microsoft is a buy. Microsoft is a buy right now. I think the market is completely disrespecting Microsoft right now, and that's also because it is in the IGV, it's the largest holding, so it's getting caught up in the whole software narrative, and that's what's bringing this down a little bit. So, I mean, it's not even Microsoft today, right? Like today, the market's flying or was flying. My God, we're actually down now. But you look at Amazon, look at the Mag Sevens, right? Like it's not just Microsoft that's not enjoying the gains today, and that's why I was trying to say like it's a stock picking market, right? Like that it's tough to do it in this small amount of stocks. If you're not in, you may not be doing too well, right? But um you just have to be patient. That's when patience comes into play, and that's where a lot of people don't get patient. But anyways, this is my projection on Microsoft right now. So base case, so I'll run you through, you can see the numbers at the top here with some of the price to sales, price to earnings growth, revenue, net income, earnings per share growth. So there's a bull, base, and bear case. And what I do is I plug my assumptions over here, and it'll give me the expected stock price. Annual revenue growth over the next 5 years. Now I can change it. I can do like 4 years. We'll just do five just because. Um, Revenue growth 13%, net margin 38%, and PE. I mean, right now it's trading at like 22 PE, which is just crazy. 22 PE for Microsoft is nuts. It's crazy. So I think 30 PE is going to be a base case, net margin 38. And this is what we get. Now, I have the bear and the bull case automatically add or subtract. So bear case is going to basically -5, bull case +4. So annual revenue growth for the bear case is going to be just under 10%, and then earnings per share under 10%, and then plus what I say 4 or 5 on the bull case. So that's how that works. I mean, 2027 on the base case, I have 557. And remember, the market is always forward looking, right? So stocks usually trade a year or two ahead of like what expected earnings are. So if you're looking at Microsoft at 550, and this is just like a fair kind of like valuation of it, but 557, very base case. There's a good chance that this can get to a bull case and hit $700. I would not be surprised by 2027, Microsoft is going to be trading at $700. Like I'm not surprised. Now, the bull case for this, where the bull case comes into play for Microsoft, first off, look at Azure growth. They just hit 40% in Azure growth, which is insane. And it's funny because when they had 39% in the previous quarter, analysts were like, well, that was a little shorter than what we wanted. You know, we were expecting 40. We wanted 40. They give them 40, and the stock still sells off. And it's like analysts aren't even happy about that. And even that previous quarter, I even put that I would not be surprised if they get back to that or get to 40, because they said in their previous earnings, not the one that just passed, but the one before that, they said if they dedicated all their GPUs to Microsoft Azure, they would have surpassed 40%. So that's why they're having all of this. Um, they're building out all of these data centers to meet the demand that they have, right? And I mean, you're looking at a company, they're growing 18% top line, right? So I think base case, I like to be as conservative as I can. I think even like this 13%, I think that's pretty conservative in my opinion. I think net margins at 38. I think, I think that's pretty fair. But I think I'm being pretty conservative here, but that's also why the bull case, I think that's why I'm saying the bull case, there's a good chance that the bull case could play out. But looking at this, right, you're looking at net income increased 23%. The cloud business, where is it? Azure up 40%. And what people aren't even realizing, or they might be realizing, but they're just discrediting, is the Copilot, the software side. They added so many seats. I don't know if it's in here. No, I guess it's not in this one. But they increased their seats in Copilot. It was by a crazy amount. It was like well over 100%, if I'm not mistaken, in Copilot. And yeah, I mean that's something that also people are just not taking into account, is that they think AI is going to take over software, but like meanwhile, this company's adding millions and millions of seats into their software business. So I don't believe it. I think Microsoft is just a buy right now. There's so much opportunity when it comes to the software side for Microsoft with Copilot. I'm pretty sure they just took away um, what was it? I think it was Claude. I think it was Claude away from their customers or something like that. Yeah, I think it was internally, something like that. They like took away Claude. But the reason I'm also saying that is because what Microsoft is apparently looking to do is make their own custom chips. And Anthropic, they just had a potential deal with Anthropic where Anthropic's going to use their custom chips. So if they get their custom chips, Azure is going to be the growth catalyst over the next few years for Microsoft. And they're supposed to make their own LLM model as well. So their own LLM model, their own custom chips, and Azure growth, market's discounting them big time. That's where this bull case kind of comes in. So by 2031, you're looking at a price of almost $1,400, so 27% CAGR. So yeah, I mean Microsoft is a buy. I've been buying it. I think my position is just not big enough, to be honest. I think I might just look to add more because the more I look at this, and even like bear case, like even bear case, like my just for the 2027 bear case price, like my average is just about there. So it's like when you look at the bear case and I'm like, damn, even if the bear case plays out, I'm still almost like about to break even. Like that's crazy. That's crazy. Crazy times. But all right. That's all I have for this video. We're already about over 20 minutes into this. I don't want to make it too long, so I'm not going to go into other stocks right now for the projections. But let me know what you think about this dashboard. You know, is it good? Is it helpful? Do you like when I go over projections? So in future videos, I can also, we can go over more projections as well. But yeah, I appreciate you tuning in, and I'll see you in the next video.